This is a Euro USD trade from yesterday. Yeah, so following on, I've just demonstrated the trade. We took it the previous day to this one rather. It was taken like around about here, and we got out somewhere there, and of course it went on considerably further, and then ran up. Then it ran up into the supply and demand zone, which has been a pivotal level all through there. So yeah, typical place to stop. Now, why I wasn't for this trade focusing on that, given on this time frame, without a shadow of a doubt, the trend lines are in play. These trend lines are trending down, and prices coming up and getting smashed. You can see the idea of pissing into the wind. It's coming up there and getting whacked down. Pops up there again, gets whacked down. Although technically speaking, well, it does break the 200. It does break the 200 on the 4 hour, but you know what? You put that up to a daily, there'll be something else there. It's pissing against the wind. Any movement upwards is pissing against the wind. These moving averages are still trending down on this time frame and just getting a bit of a consolidation there. So why? Well, so that's what's happening there. That's what's happening pretty much on that. Also, you'll see here momentum's waning. So, I mean, looking at this, this is a nothing. I mean, it's right in the middle. It's right in the middle of that whipsaw. What way is it going to go? Who the fuck knows? I should have left it alone, but I didn't. So we'll get into my thinking. I think we're looking at the 1 hour. I'll stick that back to Japanese candles. So yeah, you've got the strong sell off. You've got a strong sell off. You've got a bit of a bounce which has played out, and then yeah, you've got this consolidation around this also quite long-standing supply and demand zone, which is yellow, which means I drew it on the 8 hour, the 4 hour chart rather. So we'll just move that along. And this is on the 1 hour. This is on the 1 hour. Also there, that's turquoise, so that tells me we've got something drawn on the 15-minute chart. So now this is the way everyone learns to trade, isn't it? It's the way I learned to trade. Well, what's that? It's a head and shoulders. It's a head and shoulders, isn't it? And what's that? What's a head and shoulders? It's a bullish sign. So anyway, let's see how that panned out. And like old habits die hard. So there you've got your breakout. You've got your breakout. Now, I mean, you could equally, if you were looking at the market and what turned out the right way, we'll get onto that in a minute, but you could equally look to that is because what you've got here is, of course, you've got a move up to test this, almost test this 4 hour supply and demand zone, and so you've got swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, lower low, swing high, lower low. So if I was looking at that market in a different direction, you could just see this as if we draw. I mean, well, what is it? It'll probably 61.8, or at least, yeah. You could see that easily as a chance to like fade the move back up into this counter trend swing failure. But I didn't look at it that way. Right, so I've jumped the gun a little bit. Now, at this point, I was already in the trade. What I done is I looked at that as a breakout and decided I was going to get aggressive with it because for some reason I decided well, listen, now when I look back at it, I don't really know what I was thinking, and that's a bad sign. Well, basically what I was thinking, I was seeing the break of this 15-minute supply and demand zone, seeing this pattern and thinking, fuck it, that's going to go further up. And this is the market does this all the time. Most of the easy patterns and the recognizable patterns, especially on intraday timeframes, are traps. So I pretty much entered that one. And I had an extended stop loss by Did I have an extended stop loss? No, it was just something pretty much like that, and we're going for that. I didn't have an extended stop loss because I was playing the whole structure. So down it comes quite deep. We can take off the Japanese. We can take off now. Now, what I should have been waiting if I was following the own mythology, the own BCR-C, break close retest dash continuation mythology. What I would be looking for is a close above this supply and demand zone, and also this longer standing 4-hour supply and demand zone. So that's it here. And now this is a retest. Now what I want to see to confirm upside credentials using that methodology is I want to see 3 red candles, and using the way I do it, I want to see 3 red candles and a new high. Because you could argue, because that's a 15-minute, what we could do then is say, oh well, we're looking for a 5-minute, BCR, and well, getting messy. Well, it wasn't a good example. We'll just go through it. It's what I'd done, and it was a failed trade in the end. We never did get a 3 good green candles, and you know, I should have really took the hint, but I just wasn't thinking right, and that was it. That's all there is to say. It was a shit trade. Now we'll have a look at the hindsight trade, which we'd done if our head was screwed on a bit better. We'd be looking at the, well, just go bang. Getting very messy there now. Take all these off. Take all them off. Get them away. Right, so that's a failed trade. I'll just leave that there. Well, what we'd be looking at is a failure off of this level. On the 4-hour, on the daily, the trend is down, although price is trying to consolidate, and although you are into this weekly supply and demand zone. Obviously, I mean, you should just probably leave the euro well alone here. But I didn't. Yeah. So what if I could go back in time, what I'd be looking at as well, there's a failure off of this level, and it's broke, you know, it's a clear, you've got a break of this structure there, so this is the swing high, swing low, and now you've got an ABCD, you've got lower, you know, you've got a change in trend, potentially, so I would dare say that that was the trade, and there's another example of why. While like 61.8 didn't get no love, 55%, you'll be able to see why I have it there now. So you'd be looking for something a bit like that, give it a little bit of room in case it snakes up, and just like a retest of that would have been the trade. Not a very good risk reward ratio, of course. And oh, look what happened. And yeah, and that's where that drive you fucking nuts. That right. So that's that one. So there was the hindsight trade, and at any rate, it wasn't that good. If you want to, let's just stick your stop behind the logical level. I mean, what would you have got maximum out of there? 1.75 to 1. I mean, if you absolutely nailed it, not even 2 to 1. Yeah, so really, with the full benefit of hindsight, that was a leave alone trade, and